Hi, this is Randy Finney with the Right Side of the Chart, and today is Monday, March 27th, 2023. It's 10:46 a.m. Eastern Time as I'm starting the video, and I want to do dedicate this video to primarily the semiconductor sector. I'll start out with a quick update on the equity markets. There's really nothing new to report. We're flat. This is QQQ down 0.04% as I speak. So. Nothing's changed in the technical posture nor my outlook. There's the bearish rising wedge. We had the breakdown last week at that 306.44 target on the breakdown candle. Back tested it, and that's it. So we need to take out that low. Again, we're pretty much where we closed the week, so not a whole lot to update there. Let me go to the semiconductors. I just want to reiterate my sell signal on those. It's still a short trade. It's been for a while. And sometimes trades play out, sometimes they don't. Sometimes they play out quick when they do play out, and sometimes they take a while. That's, I think in this case, that's going to be what we're looking at. There was the initial short entry, as per the video, were throughout this sector and the private equity sector via PSP, the private equity ETF, and the individual components, of course, I covered back then. And we've had multiple back tests of that level there. We popped above it. And now all that did is put in a marginal new and even larger divergent high. Here's the divergence grew even larger since that point there, and still very much indicates a likely major trend reversal in the sector. Those are big divergences, and it'll help. First of all, that 424.60ish level that was highlighted as objective short entries, that will now trigger the next objective short entry. It was resistance. Resistance once broken becomes support. And so that to me is a big level now. It was resistance back here. We took it out. And if it fails, all the better, because that would then be a false breakout, aka bull trap, right? When we broke above it. So based on the divergences, based on my macro or long-term outlook of the markets, both fundamentally and technically, I still very much like this trade. And it's with 6 targets as of this point in time, may add additional ones depending on what happens. We went a whopping 3.9% above that entry point back there and that resistance level, and that's still very, very much within an attractive RR risk-reward ratio, because it's about a 20% downside to that 6 target. All right, let's look at the components of SOXX. That's what we're going to do. As I like to say, an index or a sector is simply a sum of its parts, and those parts are in order of market cap here in the video. We'll just look at, we won't go through them all. Again, the point of this, I've already thrown it out as a trade idea, given you the analysis, and I just wanted to let you know where these stocks are. We'll look at 2 time frames, the daily and the weekly. NVIDIA, this is the daily chart right here. You have, most important, the divergence continues to build. And we may not even have had, or we had very small divergence when I first highlighted this. I know it's been, what, a month and a half, 6 weeks. Again, relatively small time frame, because this, to me, isn't a quick pullback trade. I talk about those often. Those are usually laid out or are based off the 60-minute time frame, sometimes even 15-minute charts, intraday charts. This is a swing or trend trade, looking for a major reversal that will align with a reversal in the market. And let me say it again, I've said it before, I'll either be right or wrong on my bigger picture outlook for the broad market, and therefore almost certainly with these as well. Semis are a subsector of the tech sector. If tech is by far the largest component of both the NASDAQ 100 and the S&P 500. As such, it would be very unlikely to see the semis drop substantially and go on to hit any of these targets, even the first couple targets, if the broad market continues to hold up or especially rise. So keep that in mind. And therefore, the takeaway is 2 things. Number one, it's a concentrated trade if you are short the NASDAQ 100, Russell, even the S&P, and also short the semis. Now, you can also take some of these as individual trade ideas and be short the most bearish, long the most bullish. I told you early on when we took out that trade, I'll get to Intel in a second, that I took Intel long as a hedge, and that certainly played out. At least gave me some profits there on Intel in the beginning, and then turned around and shorted it too on the pullback. But again, we'll get to that. So there it is. What you see, or what I see, is a nice clean uptrend line fairly clean. There was one brief violation. We snapped back up in it, but it's this divergence. And then right below, you can see I have a minor uptrend line that should do the trick because it comes in together with that other trend line that forms the larger wedge. And that's really almost, actually, it's almost exactly what we had here. If you look at that wedge right there, look closely, you can see that breakdown candle right here, little head fake before the breakdown, and at that point you put in a little bit larger divergent high there, and then it played out, and the drop from high to low was about 26%. And that's the nature of these beasts, the semiconductor stocks. When they correct hard. When they rally hard. This to me is, I liken it to trading GDX instead of gold during a bull run in gold, because the gold mining stocks tend to go up more in percentage terms, quite a bit more. And likewise, when they fall harder. So same thing in the market. I expect, if I am correct, in the coming weeks to months, my semis shorts will probably outperform the shorts on the broader NASDAQ 100, NASDAQ 100 futures, QQQ, that kind of thing. We'll look at 2 time frames, so that's the daily chart there. And again, there's we're right on the edge. That's where I should do the trick. It would certainly provide an objective short entry. If NVIDIA wants to push a little higher, it's got nice resistance at 287.50. They could also provide an objective short entry. And this is what my weekly chart looks like here. I imagine, and I base off the comments, and I know there are some, I'm sure there are others on the website that aren't as vocal, but the vast majority in recent weeks seem to be dismissive of this trade and bullish semis, and that's completely fine. All I do is provide analysis. You decide what to take. But just like back then, I doubt very few believe that NVIDIA would come down here when I laid out these targets, well in advance, right off the highs, that we would drop down here. I gave you a total of 4 targets, and the first 2 were hit, and the second target was hit to the button, and that provided an objective level to cover from high to low. Remember, the sell signal really came right here, and then the back test. We'll go from the back test. So that was good for a 58%, almost 60% drop in NVIDIA. And again, I can guarantee very few listen to my voice now, and especially, or I'm sorry, back then at the time, thought NVIDIA could possibly get cut in half. Again, from just the back test, not from the highs, even higher from the highs. And so this is just how things work. First target was hit, you had a reaction, punch through it again, a little reaction on a brief overshoot. Second target hit, and this is the bounce. And then you can see a little trend line here that should do the trick, and I believe bigger picture bring us down. And this is, I'm looking at a much larger, longer term bear market in both the equity markets and the semis. So from what was a little trend at first, that was, let's just call it an initial bear market leg down and the initial, decent bear market rally. Should we reverse above those before we get to those highs there? That's what the trend will start to look like, bigger picture, like something like this. Maybe get a game off T3 and then go down to T4. Next up is Taiwan Semi. Let's just start out with the daily chart on each of these. You have a trend line that goes to the left there. We had a brief violation of that trend line. I'm just trying to hit the salient points, and really, again, when I do this, if you can make a bullish or a bearish case in the majority of the stocks within a sector, then that helps to support a larger bullish or bearish call on the entire sector. And again, the takeaway is, if you agree, you're short the semis. If you disagree, and what I'm showing you here are support levels that I'm looking to see break to help solidify the bearish case, but those same support levels for a bull could be looked to, you could buy pullbacks to if you believe the semis are going much higher. But what I spy with my little eye is a negative divergence, actually, from here and here. This divergence has been building. You had a small wedge there that broke down, triggered. So a lot of the semis, although the larger term trend from the last bull market highs is bearish, the intermediate term trend is bullish, and that's where I get it, where most people don't want to short. They want to buy stocks, and it's called recency bias. The belief that because something is going up, it will continue to go up. And and there are traders and investors and traders really that use that strategy. It's called trend following or trend chasing. I like to get in front of trends and call tops and bottoms. It's a much more, I don't know, to me it's just a natural thing, but to many, most think it can't be done. You can't pick tops and bottoms, but that's what I like to do. So sometimes you get, trying to catch falling knives, you get cut. And but sometimes when you get it, you get the big moves, because the big moves, as you can see here, usually come off the bottom. A trend follower gets clocked because they're short right there, and then we go up a couple days, and that's not going to trigger or change their trend indicators. And by the time they realize that hey, whoa, Nvidia in just what, 1 week there popped 37-40%, especially if they were adding or waited to, because remember, trend follower or trend chaser isn't going to be closing longs and going short there. They're going to flip somewhere in here or even down here. And again, in this kind of market, those people just, I'm sorry, from my experience and what I imagine, they just get chopped to pieces. You got to get in front of the trends. You have to anticipate these turns, either get in very early after the turn is made or right around the point where you figure it's going to turn. All right, moving on. So what we have here is again the nice wedge, sell signal 1 and sell signal 2, and where I was going, sell signal 2 was on the secondary trend line right there, and that's where we're at. So we're near term, very near term. Most of these semis peaked back here in February, late January or early February, and have been moving over. So again, very longer term trend bearish, intermediate term trend bullish, but in my opinion that came to an end, and near term trend bearish. And okay, an important thing, big support zone right here. It's about 86, 82 to 85, 83, 85. Need to take that out. When that's out, it should be lights out for Taiwan Semi. Again, big picture stuff. This really helps formulate where I think things are going. Divergent high right there, support 1. These were all laid out early on before anybody, or at least most people, knew or believed we'd be going into a bear market. That's when these targets were hit. At the time I listed, it would have been here. Current final target, that was back in February 3rd. Listed that as the current final target for the trade here at 59.80, and you hit that to the button. Again, these are all archived on the site. You can't make that stuff up. It's not hindsight, foresight trades. And also it was a very nice primary uptrend line as well. Now, so you might say, okay, Randy, you got it. Pat yourself on the back. Now what? Well, again, if I thought that the bear market was over, I would tell you, hey, and I'd be looking to buy pullbacks to support now. That was major resistance right there. It was support. And again, I think we're looking at a much longer, deeper drop. So I'll make these official soon. Or call it now if you want. Potential T3 4611 is a longer term and next target. You need to see the trend line go, and then of course that 59.80. Both of which I think will go, and that brings us down another 51% from where we're at today. Not from the highs, but Taiwan Semi, if I'm correct, should be chopped in half from where we're at, and that's what it looked like on the daily. Okay, I'm not going to go over them all. In fact, I have somebody coming to the house right now, brother-in-law, and giving him a canoe. I'm going to have to help him load that up on a trailer in a minute here. He's going to knock on the door any second, so let me try to get this finished up. Daily chart. ASML, again, remember I'm going through these in order of market cap, so I'm not going to go through each and every component in SOXX. You had the same thing as Taiwan Semi. You had a minor trend line break there, sell signal 1, and a secondary larger trend line break, and we've been moving lower. We just rallied back to that 673 resistance, where based on this divergent high, remember divergent high here marked the high, divergent low marked the low. That's a common theme. If I don't point it out on all of these, look back in 2021 when tech and semis peaked in November, or by the end of the year. You'll see divergent highs, you'll see trend line breaks, multiple sell signals, and again, very few, if any, thought that the semis could or would do that, and that being a drop of 59, call it 6, yep, right at 60% almost. And so that's it. So that's the daily. Here's your weekly. Hit right there, ASML to the button. That was the trend line T2 because it was in yellow. Again, you can see the created date, February 3rd, 2022 is when I gave you that target, and that was hit to the button. So you're just not going to see these kind of calls on CNBC or anywhere else. And they played out, and again, maybe that's it. Okay, great call on the semis. But it's over. We're going to go up here. You just hit your long-term bull market uptrend line, and that is very, very, very much possible. So what we'll watch for is to see if these divergences play out or not, because I can say this: in a bear market, you want to look for, even in a bull market, but especially in a bear market, overbought readings and divergent highs for the next leg down. Now, if that bear market ended here, and we are going to new highs in the semis and particularly this stock, then what will happen is divergences tend to either not play out at all, meaning that the indicators come up, start making higher highs, take out those previous highs, and you no longer have divergence, or they play out, but they play out for a relatively minor and shallow pullback. Again, it's the nature of the market you're in, and this is why it's so important. Again, I've heard these people that call themselves professional traders, oh, don't have a bias, just trade the charts. If you don't know which way to go. If you're, or if that's the case, then you can play it pure, but in the wrong market. Again, in bull markets, divergences either don't play out at all in these bearish chart patterns, such as rising wedges and all the head and shoulders and all that stuff, or they play out just enough to get you in, give you the sell signal, and then they ramp it up. So that's why I think it's important to recognize what the bigger picture is, and then decide how much of a weighting, if you will, to give to bullish and bearish developments on stocks. All right, Broadcom. This one's a big one. All right, we need to take out this S1 right there. That's 615.44. The only thing since the last video or update on these guys, the divergence got a little bigger. I would have updated it right here, and I added this line. We have nice resistance where we're at right now, or just off about 644. I can say this: it is an objective short now for two reasons. Number one, it's a short at resistance if you expect a reversal or the stock to pull back off that resistance level, again 644. And you also have, as you can see here, a minor trend line break right there. There's a nice, fairly well-defined short-term uptrend line, and we broke down and we're just below it right now for the second day. We broke down, we're clearly below it now. Again, resistance and big divergences. The kind of divergences that tell me that we'll go on, ultimately take out these T1 zone, T2, T3, T4, T5. And you can see here's the bull market uptrend line. That's something else that tells me that the correction or the bear market in the semis isn't over. Some of those, as I've already covered in this video so far, hit those long-term. These are primary bull market uptrend lines, and many of those, and they were and still are pullback targets. But I want to see at least the vast majority come and touch those, and then rally off to say maybe the bear market's over. I think, like I said earlier, those that have already been touched or were close to will probably break, but those that have been stronger, the stronger semis like Broadcom, I think will come in, and at minimum, before this bear market is over, at minimum come in and check those long-term bull market uptrend lines. This one started when the stock came public back shortly after late 09 when it came public, 2013, COVID right there, and the only thing missing is a recent tag of the level. Again, it's been one of the stronger ones. My theme that I've laid out in recent months, bear market is for the rest of us, I call it, that little Seinfeld spoof, where the stocks that didn't get the memo or maybe didn't, went down, most everything went down a little bit, but, are closer to their bull market highs. Those are the ones that the market snipers are going to come after next, and the bear market snipers, and they're going to pick those ones off one by one. Texas Instruments, I'd say this trend line here, right here, uptrend line, and we're back testing from below, but most importantly, you just put in right here, you got it, guys, divergent high, just like right here was a divergent high, and it gave us that, okay? And then weekly, we're very close to the primary bull market uptrend line. This thing, in fact, Texas Instruments has a nice little symmetrical triangle. If you take that's a long-term primary trend line. And again, what happens here, if these trend lines, if I'm correct, they start to break. Okay, now that you've ended, this was a more of a, we can call it a secular bull market in semiconductor stocks with cyclical bear markets along the way. All these corrections were well into the double digits, 35 30+% all way along. So those were your little cyclical bear markets, cyclical bulls within the larger secular bear. So when these, if and when you see the majority of these semis break, that's going to tell us the longer term trend has changed. Okay, I got to pause the video, help load a canoe, and I will be back to wrap this video up. Okay, and I'm back. So anywho, there's the weekly, the long-term uptrend line of Texas Instruments, and that's where I figure at minimum the stock's going, like a lot of other things out there in the market. What I call the pre-COVID highs right there from that drop we had into the March lows seem like, to me, they almost seem like magnets for where the markets are likely headed based on, again, both the technicals and fundamentals, and I wouldn't be surprised to see those levels ultimately go, but we'll just call that intermediate term target. I'll do a few more. Next up, AMD, big level there. That's why I had it colored up yellow, 99.61 give or take, but you had major reaction high. That high, we had a powerful breakout, several back tests right there, successful back test, then broke it, and it was impulsive when you drop, failure. Two false breakout attempts. When they failed, it was pretty violent. Another false breakout attempt and a violent rejection off that level. So all that, that's why I colored it up yellow. It tells me that's a very significant battleground between bulls and bears, and we're there. What do you do? I mean, again, I'm either going to be wrong or right. It's simple stuff. I'll try not to overanalyze it, overthink it. I'll take that shot all day long, and I'll allow for a little, because that's what this market does. You almost have to factor in and expect trickery here by the powers that be, the market makers. Also, it's volatility and momentum. When you have a lot of momentum heading up into a resistance level, it's something I call a momentum fueled overshoot. So you can give it a little room, and that's what I've been doing, and that's why I've been consistently persistent, if you will, on this trade, and just wanted to update it now. And I want to update it now too, because this is the time. It doesn't do, if it plays out, that is. Again, it may not even play out, but it doesn't do really anybody any good if I sit here and revisit these, when we're down here, when AMD has come down to this trend line here. You can see my target. So if we get rejected, remember, the basis right here for a short is negative divergence right there, breakdown, back test with a divergent high. You did not have the divergence when you broke down, but now you did, into resistance. You're still relatively close to that resistance, close enough to make an objective short. First target 88.66, second target this support zone, very good support zone with an intersecting uptrend line. That is a 10 on the scale 1 to 10 of where I think the stock's going to go if we start to reverse here. It's just a confluence of really good support, and again, that's just an initial target. That would be a drop of down to the top of the zone and the trend line about 22%. So above average risk and above average return. Long term, AMD broke this long term trend line, put in a divergent high, big divergence on the weekly, and I think this is really what's setting the stage for the next big drop in the market in these stocks, is the fact that a lot of eyes are seeing that the downtrend lines and the 200-day / 40-week moving averages have broken out, and on face value that's bullish. So I am sort of using my veto powers, if you will, or overriding what I acknowledge to be bullish, technicals in the market. And a lot of stocks, again, those like with the S&P 500, the recent breakout above the 200-day moving average in the primary bear market downtrend lines. But remember, I predicted back then, and still maintain it's not over yet, that those breakouts would fail. I'm referring to, just to loop back, this right here. And so I think the same thing is going to happen in the semis. And if it does, that's the kind of powerful stuff you need, because you need that paradigm in shift in thinking where the masses believe that the market is now in a buy signal. And so again, SPY is still battling. We're in very close proximity. You can't say the breakout is successful yet, but you can't say the false, or whipsaw failure of the breakout is in play yet, because we're still, it's kind of sloppy trading around the 200 days and around that primary trend line. So I'm trying to use that analogy here, or the comparison on where were we just at on this one, AMD. So it's we're comfortably above the downtrend line right there. Again, the bear market downtrend line, if you want to call it that downtrend line off the highs. But we also rallied into big resistance, about 98.56 here on the weekly it shows as. And so if we go down, that's going to be quite bearish. And there's a long-term target about $35. And if hit, it's going to cut the stock in half, more than in half, be a 65% drop if hit. So, all right, a couple more big ones here. Qualcomm, this is a weekly, because I was on the weekly. I should have started on the daily. There's an uptrend line right there. There's a downtrend line kind of triangling, but that was a big divergent high. And I have a note here, Qualcomm, tends to fall very fast following sharp rallies, and that was the case. There was a sharp rally. I pointed that out at the time, and from there that stock fell 46%. So that's the weekly chart. Here's a daily chart, kind of a busy chart. What stands out probably when I look at this, other than there's a trend line in which to trigger a sell signal, but you can see this one flirting with the 200-day moving averages. Both the simple and the exponential come in together. There was a failed attempt to take out the 200s right there, got rejected, and we're back below. Rejected on the 200s. We lost them right there. And other than that, this one has, it's not as if these 200s don't act as support and resistance. They do. Those are significant corrections. If you look at how far the stock fell each time, it was 28% there. Once you took them out there, the drop was 21%. And so that's it. You're in a bear trend. But you can see back in the bull market, you had your corrections down below the 200s, and then the bull market resumed, right? This was a bull trend with corrections, especially when you took out the 200s, but the trend was bullish. But since late 2021, with the stock market and everything else, or the tech at least, remember tech topped and Nasdaq topped in November. Everything else, S&P was in January of 2022. But that's the trend right here. So look, I'll give it. If a stock can do this, take out back the 200s, take out that previous reaction high, those are bullish check marks. But if it gets rejected here and it starts taking out these previous lows, then it is probably continuing on down to those longer term targets. A couple more. Intel. This was, as you know, as I said earlier, one that I took long, highlighted as long trade idea here, and let's breakout or somewhere in there. I gave you two targets, second of which was hit, and then also mentioned it as when we were at the top of that range right there at that 31.12 for a quick pullback trade, and I covered right on that trend line, I believe it was. And so this is still powerful stuff, and if the semis or even Intel, it's unlikely to see Intel buck the trend by a lot. In other words, if all those other downside targets, I'm talking the next downside targets, are hit on the majority of the semis, it's very unlikely Intel's going to break out of this. Possible, but unlikely. But you have the 200 days right there. You have that top of that range, and that would be the target. The downtrend line would be my next target if this is a powerful basing pattern, or that's glass half full, free bulls. Bears see a potential, just a consolidation in a bear market. So if you break to the downside, that's going to be pretty bearish, and it's going to be a while. If you break down, you could get divergence later on, but you'd probably get another thrust down that's probably going to take Intel all the way down here. I'll give you this target now, right about 1930. So we'll see. But as of now, it is what it is. It's below price and 200-day / 40-week moving average resistance. So certainly, breakout would provide an objective long entry. And again, whether or not I take that breakout would depend on how the sector looks. I'll have to see more and more bullish developments on a lot of these other stocks. That's why I go in detail and do these videos, because again, you can look at any of the semiconductor ETFs or the SOXX semiconductor index, but you're not getting the true picture of how all the other individual components look at the time. So there it is, big divergent high. That was a beautiful on AMAT, Applied Materials, and just like you had here, divergent high correction, divergent high correction. And I measured it out. That was a 46% drop over 6 months, 54% drop over 9.4 months, 47% drop over 1.2. Back here, I would have given it to you then. Let's see when I made that target. Created on January 4th, 2022. I said target would be a 56% drop, and that was right right in the beginning of, so it was right there, yeah, right before, right after, at the time we broke down, and hit that to the button. 56% drop. And then it wasn't just that, you put in a divergent low and you hit the trendline support. So there were all those reasons to cover the short. The primary and sole target I laid out was hit, and you had positive divergence, and you hit both the uptrend line and that level there. But again, all right, so what's the point? Well, I think that bounce has come full circle, and we'll probably go down, and next time around there's a good chance we can take that trend line out and continue lower. But we'll see. But watch this one, because AMAT, KLAC, those are the big chip equipment makers. So they're kind of give you an eye on where the sector's going. Big resistance here on the daily at about 125. I tried to draw a straight line, more not a zone, but that yellow line. And then this level here, you have the minor uptrend line right there. There's our divergent high. There was a larger uptrend line which is broken, been being back tested. And so a break of that secondary trend line should bring us to 110.61. And again, this is just a daily chart. And at this point, if we get these sell signals, we start to take these levels out, I'm looking at maybe what might be the next larger primary leg down. So that I don't even have targets here on this daily. I could, of course, give them to you. You can have a reaction low right there, about 95. A couple more, and we'll wrap up. ADI, analog devices. You got it. Sound like a broken record. Negative divergent, divergent high right here, divergent high right here, divergent high right there. Simple stuff, right? Boom. Divergent high, boom. And divergent lows, boom. Divergent low, boom. Divergent low, boom. All right, wash, rinse, repeat. You want to be short off these divergent highs. Next sell signal to come on the break of this trend line, then a break of 180.30, 180 we'll call it, and then 170.25 would be your first target. I'm going to move this one down right now to about 159.85, so forth and so on. That's how it looks on the daily. Weekly, I could probably add a nice long-term uptrend line right here, which I just did, and that's probably where we're headed, and then maybe break down. This is a big divergent high on the weekly chart, and so that's how that one looks. LRCX, Lam Research, already tagged the bull market uptrend line right there recently. Whether it comes down to it again or not depends on what the sector does. PPO looks to be poised to roll over, but hasn't done it yet. That's a weekly chart. Daily right here, big resistance right there, about 545. Boom, 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 keeps getting rejected. So obviously bullish if it can take that out. Bearish if it can't, especially if it gets rejected. We had a divergent high here. It started to move lower. Then we took out the trend line, and we're below that trend line. And we really need to take out these recent lows, just like the market. Got to take out the recent lows from a couple Mondays ago. That should do the trick to usher in more selling. Micron looks a lot like Intel, where it's, you know, this big potential basing pattern here. Look at this, knock, knock, knock. Wants to pop above their key resistance zone, runs up from about 64.40 up to about 65.80. Like it's nothing but bullish if it can take that out with conviction. And unless it does, we're below resistance. So there's a little minor trend line in which to trigger a potential sell signal. In fact, it just took it out. Look at that. Little minor trend line, not much, but that's a breakdown. And that's why I'm doing this video. I just, again, wanted to reiterate my sell signal and my bearish outlook for this sector, despite the fact this market seems to be holding up in the face of tremendous, bearish macro developments with the banks and crypto and everything else that's gone on lately. But that's it. KLC, I will end it here because that's another chip maker. KLAC put in a divergent high right here, took out that nice trend line right there, sell signal. Had a little minor trend line here, was going down, took out that, but it ran back into resistance. That's at about 397.50. That's pretty good resistance. You can see all these reactions along there, and support zone right here. If and when that support zone goes, we'll probably be in that hard sell mode, that you get in during bear markets, this kind of thing. And then from a longer term perspective, KLAC, again, one of the big chip equipment makers. Look at this long-term, beautiful long-term uptrend line. It just hasn't been visited in this stock. A lot of those stocks, like I showed you, already checked their long-term bull market uptrend lines. Many of those come off the 2009 lows, like that right there. And that's where I think this stock is going before all said and done. If it gets there, depending on if and when it's hit, probably come in with that 213-ish support. You're talking about 44% downside in KLAC. And I can all but guarantee if KLAC drops 44%, the majority, if not all, of the other semis are going down with it as well. I will wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.